Management of TeamLease joining in, so just request you to listen into that conversation and give us your thoughts. There's a report by Kotak Securities where industry discussion suggests that IT sector staffing headcount in the second half of FY23 will continue to see a decline. In fact, when we had spoken to TeamLease after the second quarter, they had told us about that sudden slowdown in IT hiring and that open positions in the sector were down 40%. To discuss where things stand now, we are joined by Ramani Dathi, the CFO of TeamLease Services. Ramani, thanks a lot for joining in. Has it gotten worse since the last time we checked with you? I think you flagged off the fact that, hiring has slowed down quite a bit in IT. How is the situation on the ground now?
Same as what we have indicated in our last discussion, because Q3, typically for IT, there will be a hiring freeze during the month of December. But this time, for the entire quarter, we have seen the hiring freeze. We haven't lost any headcount. There is no further drop in the headcount. But having said that, there are absolutely no new open positions for this entire quarter. And for next quarter also, at this point in time, we are not seeing any kind of improvement at this point in time. But maybe after Jan, once the new budgets for next year get rolled out by the corporates, we have to see how it works out.
You said during the second con call that open positions were down 40%, and now you're saying that there are no new open positions. Just wanted an updated number on that. And a lot of the e-commerce, logistics companies, etc., have said that festive season hasn't been up to their expectations. In fact, we heard that from a lot of the consumer discretionary companies as well. What are the job situations, hiring numbers out there in e-commerce and logistics?
No, absolutely. Because even when we look at our general staffing business, typically where we do the entry-level jobs, working with e-commerce companies, FMCG, FMCD, for us, Q3 is typically the highest contributing quarter in terms of headcount and growth. But this time we haven't seen that kind of surge in this quarter during the festive season. So the growth is similar to what we have seen in Q2. So to some extent, the festive season is a little disappointing for us as well in terms of the overall headcount addition.
Right. So is there a kind of clear slowdown in hiring by the organized sector? Or is that too much of a sweeping statement to make?
Yeah, it's kind of a sweeping statement because we are seeing good trends of hiring in some of the large industry verticals like banking, financial services, telecom, and also to some extent in FMCG, FMCD. E-commerce is one where this festive season is disappointing, e-commerce and retail, both of those. And also the startup industry, which has a 5-6% contribution to us. So that has completely went on a hiring freeze this time. And that being fueled by the overall hiring freeze in IT, that also has impacted us. Okay. But having said that, the rest of the other industries in general staffing, the hiring is continuing. Even the outlook for next quarter is looking bright.
Okay, well, there are a lot of these new terms, right? Boomerang employees. There's career cushioning, where people are sort of looking out for jobs when they currently have a job. Boomerang employees, people coming back from all the startups that they were, getting into many years ago. So I guess maybe hiring has come back. But I wanted to ask you a little bit about the margins for your own business, because if you look at it, Kotak put out a note where they said that FY23 your margins could be lower than FY22. It could barely be 1.7%. Are you facing pressure operationally? And if yes, what could both FY23 and FY24 look like on the margin front?
Yeah. No, definitely we are expecting a lower margin FY23 compared to FY22. So it's mainly because of two reasons. So one is the overall salary inflation is very high and we don't have control on our associate salaries because it's driven by the market. And our realizations, our gross margins, majority are fixed in nature. So while our realizations have fixed, the salary inflation is almost 12-13% this year. So that has diluted our margins. The second one is one of our major margin contributor is IT staffing. So that being completely slowed down over the last 2 quarters also has impacted our margins for this year.
So your earlier statement of 1.7 to 1.8% margins this year stands, or is there a downside risk to that?
At this point in time, 1.7, 1.8 looks reasonable. So we are targeting those kind of estimates for FY23. And we are on track to that.
What happens to your growth projections that you had made at the start of the third quarter? I mean, you expected general staffing to grow about 20-25%. the first half you've grown 32%, but then with the largest quarter not doing very well for you or as well as you expected, would you want to scale those down for the full year?
No, for the full year, we are still targeting 20-25% growth overall at the company level as well as in general staffing business vertical. IT is the only sector where we are forecasting a flattish or a marginal dip, both in terms of revenue as well as profitability for this year. Otherwise, general staffing has been growing well.
Okay.
So last time we spoke, I think you'd said headcount in 23 should be 20-21% growth. And you'd told us that revenue growth should be about 30-odd% this year. Those numbers stay?
No, it would be around 25% revenue growth for this year overall,
Okay.
and headcount growth plus minus around 20% is what we are targeting in our staffing business.
Okay.
And so that's a bit of a, we've spoken with you in the middle of November. So from 30% now for the full year with the Q3, almost the full Q3 behind us, you're saying revenue growth should be about 25, not 30%.
No, even that time also I have indicated between 25-30. So more or less will be in that range in our general staffing business. And also it's to some extent driven by inflation. If the salary inflation continues at the current rate for the next few months as well, then we may get, slightly higher than 25% as well. And also Q4, the pipeline for BFSI, telecom and FMCG are good. So if we can get to those numbers, then upwards of 25% revenue growth is still achievable in general staffing.
Okay, upwards of 25% growth is achievable in general staffing. Thanks a lot for joining in and giving us a quick take on the business as well as the way forward. Well, let's do one thing. Let's move on now. That was about TeamLease, but there's a new